Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So far I have completed 19 problems on depreciation. This is the last and final video on depreciation. In this video, last two problems, 20th and 21st problem, I'm going to explain you. Hope after watching so many videos, you got a lot of confidence on the topic of depreciation. Remember, this topic is little bit difficult. Until and unless you are serious, you are fully concentrated, you cannot be able to understand. So my suggestion, if you want the complete command, watch all the videos in the sequence. Don't join in between and don't leave in between, otherwise you will not get the complete command. So follow my instructions, definitely you will get a lot of knowledge from these videos. Now, 20th problem. Before starting 20th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready and take a screenshot of the solution of 20th problem, then I'll explain all the points in detail. Now, see the 20th problem. Paul has a business for which he bought a new machine on 1st April 2008 for $1,200. He decided to charge depreciation on the machine at 15% per annum using the reducing balance method. So first, he purchased machine on 1st April 2008 for $1,200 and depreciation is 15% per annum on reducing balance method. Point to be remembered. Now required. Calculate the depreciation to be charged on the machine for the year ended 31st March 2009 and 31st March 2010 for 2 years. So when the machine was purchased 1st April 2008, the first year ends on 31st March 2009, second year ends on 31st March 2010. The first question, calculation of depreciation. Depreciation to be charged for the year ended 31st March 2009. First we calculate for 9, then we calculate for 10. What is the cost of the machine on 1st April 2008? That is 1200. Now depreciation up to 31st March 2009 for 1 year. So 15% is the rate given. So 15% of 1200, 180. So deduct 180, 1020. This is the book value on 1st April 2009. 1st April 2009, beginning of the second year. Now we have to calculate depreciation for the year ended 31st March 2010. So at the beginning of the year, what is the book value on 1st April 2009? It is 1020. Now depreciation for the second year, 15% on reducing balance method. So 15% of 1020, you will get 153. Deduct 153, you will get 867. This is the book value or balance value on 1st April 2010. So we have calculated depreciation on 31st March 2009 and 31st March 2010. For 31st March 2009, depreciation $180 and 31st March 2010, $153. The first question completed. Now second question. Show the entries in the provision for depreciation account for the machine in Paul's ledger for the 2 years ended 31st March 2010. So on 1st April 2010, Paul sells the machine for $750. Required. Show the entries in the disposal account to record the sale of the machine and show the transfer to income statement for you. First of all, we have to make one provision for depreciation account. So we have opened provision for depreciation for machinery account. See carefully. First year ends on 31st March 2009. The entry for depreciation is income statement debit, provision for depreciation credit. So income statement credit side. No, sorry, provision for depreciation credit side. Income statement. How much is the depreciation for the first year? $180. So 180. I have taken 180, first year depreciation. Now close the first year. Take 180 on credit side, 180 on debit side. The balancing figure is $180. This is on 31st March 2009. This closing balance will become opening balance for the next year, 1st April 2009. 1st April 2009 brought down 180. This brought down. Now second year ends on 31st March 2010. Now 31st March 2010. Again the entry will be income statement debit, provision for depreciation, credit. So credit side income statement. What is the second year depreciation? 153. So take 153 as the depreciation. Now balance it. We have to close 31st March 2010. Now take the total 300 and 333 total. Same 333 on debit side. Now balancing figure 31st March 2010. The balance is 333. Now carried over to the next year, 1st April 2010. 1st April 2010. Balance brought down 333. So we have completed provision for depreciation account. Lastly, it is saying that on 1st April 2010, Paul sells the machine for $750. This machine was sold away. So whenever a machine is sold, we open a new account called asset disposal account. So here show the entries in the disposal account to record the sale of the machine and show the transfer to income statement of any profit or loss. So it is asking you to make a disposal, asset disposal account. Asset disposal account. The first entry, the cost of the asset should be transferred to asset disposal account. The entry will be asset disposal debit, then machinery account credit. Asset disposal debit, machinery account credit. So here machinery account. What is the cost of the machine? $1,200. The actual cost of the machine was $1,200. So here I have taken 12. First entry posted. Second entry will be transfer the provision for depreciation to asset disposal. The entry will be provision for depreciation account debit, asset disposal credit. So asset disposal credit side. Provision for depreciation on machinery. What is the total depreciation provided? 333. So 333 I have taken. The next entry will be sale proceed. This machine was sold and cash is received. So bank account debit, asset disposal credit. The entry for sale. Bank account debit, asset disposal credit. So asset disposal credit side bank, $750. The machine was sold for $750. Now balancing figure will be either the profit or loss. That profit or loss should be transferred to income statement. Now if credit side is more and debit side is less, you will get balancing figure on debit side. It's a profit. If debit side is more, you will get the balancing figure on the credit side. That is a loss. So in our problem, debit side is more. Debit side is 1200. Credit side is 333 and 750. So from 1200 minus 333 minus 750, the balancing figure you will get 117, 117. The balancing figure you are going to get on the credit side. So it is a loss. It's a loss. The entry will be income statement debit, asset disposal credit. Write it down the entries. Whenever I say an important point, immediately you should write it down. Income statement debit, asset disposal credit. So asset disposal credit side. Income statement balancing figure, loss on sale 117. That's all. So it is asking you to make two accounts, provision for depreciation, asset disposal. Finished. So this is the end of problem number 20. Now the last and final problem on depreciation, that is problem number 21, I am going to explain you in detail. See the problem carefully. Bayani depreciates his fixtures and fittings using straight line method of depreciation. The businessman is Bayani and depreciation method applied is straight line. He provides a full year depreciation in the year of purchase and none in the year of disposal. Whenever an asset is purchased, irrespective of the period used, full year depreciation. When an asset is sold, don't see how many months it is used, simply no depreciation on the year of disposal. He provided the following information: fixtures and fittings, this is the asset. Cost at 31st December 2013, 42,600. At 31st December 2014, 13 and 14, 42,600. That means no further fixtures and fitting were purchased. Accumulated depreciation $12,780 for 2013 and $17,040 and 31st December 2014. So depreciation increased. There was no addition or disposal during the year 31st December 2014. So during the year 31st December 2014, no purchase, no sale. Now, calculate the rate of depreciation Bayani is applying. So before calculating that, take a screenshot of the solution of this last 21st problem. Then I'll explain all the points in detail. Now, first question, it is asking you to calculate the rate of depreciation Bayani is applying. What is the percentage? It is not given. Now, how to calculate the rate of depreciation? See carefully. Depreciation provided during the period ending 31st December 2014. Here, accumulated depreciation is given on 13 and 14. So, last year 13, current year 14. So last year accumulated depreciation 12,780 and current year accumulated depreciation 17,040. So how much is the increase in depreciation for the year ended 31st December 2014? Now, depreciation provided during the year ended 31st December 2014, 17,040 current year accumulated and 12,780 last year accumulated. Minus kar do, you will get $4,260. This is the depreciation provided during the year ended 31st December 2014. Now, cost of the fixtures and fitting, what is the cost? 42,600. The rate of depreciation is equal to depreciation divided by cost into 100. Depreciation 4,260 and cost is 42,600 into 100, you will get 10%. The first answer we got. The rate of depreciation applied is 10% on cost, right? Now, next page, additional information. On 1st May 2015, Bayani bought a new fixture and fitting cost 12,000. Already old fixture and fitting were there for 42,600 and new fixture and fitting was purchased for $12,000 on 1st May 2015. And on 1st August 2016, he sold fixtures and fittings which had cost of $10,000 and on which 4 years depreciation had been provided. The one fixture and fitting was sold. The cost of that fixture was 10,000. The purchaser paid Bayani in cash. Required. B point. Name the books of original entry used on 1st May 2015 and on 1st August 2015. Which subsidiary books are used? On 1st May 2015, a new fixture was purchased paying the cash. So, this purchase of fixtures by paying cash, it will be recorded in cash book. So, you can see here books of original entry on 1st May 2015 cash book. A new fixture purchased for cash. And on 1st August 2016, there is a sale of fixture. Whenever there is a sale of fixture, two subsidiary books are used. First of all, for adjustment entries, we require journal. The adjustment entries will be passed in journal and the sale proceed received is recorded in cash book. So on 1st August 2016, the subsidiary books used are cash book and journal. Adjustment entries will be done in journal and cash received entry will be done in cash book. That's all. B point completed. Now C point. Complete the following table by inserting the amounts to be shown in financial statements. Show you are working in the spaces provided. So this is the table given in the problem. The only thing you have to fill up working and dollars. The first details are already given in the problem. So one by one we'll discuss. Fixtures and fittings at cost on 31st December 2015. See here. 2013 and 2014, we have fixtures of 42,600 given in the problem. And on 1st May 2015, some more fixtures are purchased. 12,000 worth of fixtures are purchased. So on 31st December 2015, we have two fixtures. The old fixtures 42,600 and the new fixtures purchased on 1st May 2015, 12,000. So total 54,600 is the total cost of fixtures and fittings, right? Now fixtures and fittings at cost on 31st December 2016. Now on 1st August 2016, one fixture was sold. The cost of that fixture was 10,000 given in the problem. On 1st August 2016, he sold fixture and fitting which had cost of 10,000. So 10,000 fixtures gone, deduct. So 54,000 total minus 10,000, 44,600 is the fixture and fitting on 31st December 2016. The next, depreciation charge for the year ended 31st December 2015. So 2015 means before sale. Before sale we have totally how many fixtures? Two fixtures. 42,600 plus 12,000, 54,600. What is the rate of depreciation provided? 10%. So 54,600 into 10 by 100, 5,460. This is the depreciation charge for the year ended 31st December 2015. Now accumulated depreciation at the end of 31st December 2015. So first, what is the accumulated depreciation 31st December 2014? 2014 17,040. So 17,040 plus depreciation provided during the current year 5,460. So total depreciation, accumulated depreciation 22,500 at 31st December 2015. Now depreciation charge for the year ended 31st December 2016. 2016, what is the depreciation? So what is the value cost of the machine on 31st December 2016? 44,600. So 44,600 into 10 by 100 for 4,460. This is the depreciation charge for the year 31st December 2016. Lastly, accumulated depreciation at 31st December 2016. Total depreciation. So what is the total depreciation up to 31st December 2015? It is 22,500. 22,500 plus depreciation provided during the current year 4,460 minus what is the provision for depreciation on that fixture which was sold away. It is given in the problem. It is given in the problem $4,000. $4,000 is the depreciation provided on that fixtures which was sold. So minus 4,000. The accumulated depreciation comes to 22,960. So we have filled up the complete table. Now D question. State the double entry needed to record. State the double entry needed to record the depreciation charge for the year ended 31st December 2015. Debit entry, credit entry. And when depreciation is provided, what is the journal entry will pass? Income statement debit, provision for depreciation, credit. So here, income statement debit, provision for depreciation, credit. D question completed. E. State the double entry needed to eliminate the accumulated depreciation on fixtures and fittings sold on 1st August 2016. What is the entry for eliminating the accumulated depreciation on sale of fixtures? The entry will be accumulated depreciation or provision for depreciation debit, provision for depreciation debit, asset disposal credit. So here entry for elimination of accumulated depreciation, provision for depreciation debit and asset disposal credit. E point completed. Now F, the last and final point. It is asking you name one method of depreciation other than straight line method and explain how it is calculated. Apart from straight line method, what are the other methods of providing depreciation and how it is calculated? It is asking. So in the problem itself, it is given name of the method and method of calculation. So I am explaining two methods instead of one method so that it will benefit you. You can be able to remember. Reducing balance method. Apart from straight line method, the other method is reducing balance method. How depreciation is calculated under reducing balance method? Annual percentage rate is applied on the net book value of the asset. So annual percentage will be applied on the net book value of the asset. That means after deducting depreciation, whatever is the net book value, on that net book value, percentage is applied for calculating depreciation according to net reducing balance method. Or one more method is the revaluation method. In the problem it is asking you only one method, but I am writing two methods so that you can remember. Revaluation method. The difference between opening and closing valuations is taken and adjusted for any purchases or disposal. So revaluation method, we compare the opening value with the closing value. Whatever is the difference between opening and closing value, that is the depreciation according to revaluation method. So we have completed 21 problems on depreciation. I've explained all the short problems, MCQs and long problems on depreciation. Hope you have understood all the problems. My suggestion, don't watch only once. Don't watch casually. Watch with full interest, with full seriousness. Then only you can be able to get the command. Inshallah, the next topic will start in the next video.